This swamp reeks of secrets and danger. How are you planning to navigate these treacherous waters?
This is the Trading Psychology Podcast. This is VP, creator of No Nonsense Forex and author of the book No Nonsense Forex Trading Psychology. And with me, as he is every week, it's the man with the plan. It's Rob Reinhold.
Hello, everybody. Nice to see you this week. Excited to talk about this episode.
Yeah, this is one you put together, and I'm really surprised we have not talked about this more because I think this is going to pertain to a lot of people. You guys saw the title. We're talking about jumping systems. Now, I think more than most episodes, we need to define what we mean here, because I don't think when a lot of you read this title, you're thinking the same thing we're thinking. So, Rob, go ahead and kind of define terms here and just make things clear for everybody before we even get started, because I just want to make sure everybody's looking in the right direction here.
I think that is a great place to start, Patrick, because we have to define this very clearly just so everyone knows exactly when they're jumping systems and when they're just doing their job as a trader. So let's talk about, again, systematic trading, where you have built a system, you've back-tested it, you've demo traded it, and you have this system going to where you are methodical and you simply do the same thing over time. So let's talk about jumping systems. Let's kind of talk about what is jumping systems and what isn't. Now, I've talked about how I don't like what's called black box trading, where you buy these EAs, you buy them off of wherever you buy them, and you plug them in, and supposedly you let them run by themselves forever and you never have to do anything. And I've been very negative about those because I talk about how things change in the market. The markets change, volatility changes, trend changes, and if you're not driving that system, you have no control. You've just ceded all your control over, and it's going to probably not work. All traders at all times should be monitoring and updating and optimizing their systems. So Patrick, I know you started this process a very, very long time ago, and I'm sure that your system today is wildly different than the system you started out with. Can you share a little bit of that with us?
Well, yeah, how far back you want to go, really. It's like, before I just really kind of put the pieces of the algorithm in place, I was really just trying to figure out what worked. But I still wanted to trade, so I wasn't really testing right. I was just kind of eyeballing it. I was like, ooh, this looks really good. Oh, this looks really good. Let's see if we can, curve fit it to, work well together. And now let's go ahead and trade it. Now, that's kind of what my journey looked like early on when I was really discovering, other indicators that weren't really widely known. But, over time, I was like, okay, I need a bit more structure here. So I added on pieces, tried not to add too many pieces, and that's what I have today. So structurally, it wasn't even really in place up until maybe, late 2012, 2013. But yeah, if I were to take a snapshot of what I had back then to what I have now, only one indicator would remain the same, and that was the ATR. And that's not even an indicator that determines price direction. So yeah, it's been through many iterations. I've never really jumped systems. I've just kept improving on the ones I've had, but that does include changing a lot of parts, for sure.
Let's break this down into two terms. Let's talk about system building and then system optimization. So the system building is what you talked about in the beginning, where you try new things on. You said, hey, let me do some A/B testing here, see what's best. But once you had made your system, where you pretty much said, hey, this is it, and you ran it and you were consistent and you did the same thing over time, that's when system building ends and system optimization begins, where you're saying, hey, this is my core system. I'm going to see if I can get this a little bit better, or I can see if I can make some changes here, or, hey, you know what, maybe in this kind of environment, if I add this on, it's going to perform a little better. So hopefully everyone sees here, you have system building, which is a lot of trial and error, which is a lot of, I think this is going to work. You test it out, it doesn't work, you got to scrap it, and you got to go back and figure out what's going to work. System building is its own separate thing, and you're always interchanging parts. System optimization. So when you have your core strategy down and you're simply trying to fine tune it. So we're really talking about system optimization when we come to jumping systems. So we're no longer testing things, we're not only back testing things, we have a real capital on the line, and we've been trading this for a while. At some point, that system will be tested, I guarantee you. And not just the system, but it's you that's going to be tested. And Patrick, I'd love it when you say that, when you back tested, you weren't there every day to agonize over all of the ins and outs and all the little blips here and there, because it was just, you look back 3 years and you said, oh, these are the expected values. But when you're in real time and you have to sit through all the agony of little things up and down, that's when your system gets you. And that's really what we're talking about here. So I just love, Patrick, how you talk about how when you were back testing, it didn't care about anything. It didn't care about the drawdowns. It didn't care about the flat, month that you had. It just didn't care.
Yeah, the system, when it was back testing, never sat there and said, you know what, maybe it was working before, but it's not working now. Maybe we should quit. No, it just kept going. And so that's why you got the results you got, whatever those results are. Chances are, if they were good, that's what you're using right now, or some variation of it. So yeah, just always something to remember. But real quick though, Rob, before we move forward here, so we kind of know what it's not, right? Can you tell us just like a quick, definition of exactly what jumping systems is for the context of this episode?
Absolutely. Jumping systems is when you abandon or change parts of a system in times of distress. I think that is the most clear way for me to say what jumping system is you do it under duress.
Okay, good. And you and I were talking before the show as well. You said you are going through this right now with some of your best traders, correct? And kind of give a little background on that, because I think this is really interesting, because I will bet the story you are about to tell is something that a handful of our listeners are going through right now.
Well, it's something that every trader is going to go through at some point in their trading career. There's no question about it. So I have a handful of SPX traders that are delta neutral. So it's a lot of terms here. If you're not familiar with options, it's basically that you are profiting from time value, from the option expiring in value. And what you do is you keep your portfolio not long, not short, but you keep it to where it's right in the middle. So you have zero delta. And so if the market goes up, then you sell a little bit more delta. The market goes down, you buy a little bit more delta. So you're always keeping your price exposure down. So you're keeping your price exposure down, but you're selling a lot of options to where you're bringing in premium while this thing sits there. Now, the risk of this, if there's a big move, it just means that sometimes that delta exposure or that loss will become greater than the decay in the underlying options, and that's when it can lose. But that's not what's happening here. So these traders have been trading these strategies for years, and I've been sending distribution month after month after month, and they've been some of my best. This year, they are flat to down. And I've been talking with them, reaching out to them and saying, okay, look, let's talk about where we are. Let's talk about where you are. Let's talk about your strategies, because I'm starting to see a little bit of different behavior. And that's always a red flag for me that says, okay, here's someone with a strategy that's worked for years and years. It's not working right now. Let's make sure that they don't make any really big mistakes. So I'm absolutely dealing with this right now at Maverick, and it's with a handful of traders that have done really well. So you don't want to change systems under distress, and that's really what this episode's about.
All right. So moving on to the reasons why this may be happening. Now, you have a few written down here, and I have one written down, but I want to start with mine because I think in a lot of cases, it's the backdrop for the other three. System build, it's almost kind of like the journey is better than the destination. System building can be very exciting, especially when you're doing it for the first time, because you're discovering new things. You're discovering the synergies between that and the things you have. and you're seeing it work really well, or you're back testing it and you keep seeing better and better results than what you had before. That's really exciting. I mean, that's it. Just the mind races when you see things like that, just because of like what could be with a system like this. And then you put it into play, and lo and behold, it's working. And it might be working, like you said, Rob, for a year, maybe two, before you really see any type of adversity. And so with your traders, we're over halfway through the year now, and the system that they've tested, took their time putting together, and really performed well with for 2 years, is now not. So I think the logical move in their minds is, well, it must be the system, and we need to change over. So before we talk about the solutions side of things, go over what you think probably are the reasons that this desire to completely go to something different in the very first year it's not working is happening to some of these people.
It's going to be a whole bunch of things, and one of the first ones is going to be FOMO, where you are used to making money, and then you see, all the people out there trading NVIDIA, Supermicro, all this stuff that's running, and yet your system is underperforming. And you're seeing other people are making a lot of money doing other things. Once you sit there long enough, twiddling your thumbs and working your butt off, again, and these are very complex systems, that these people are very, very intelligent. They're seeing that their neighbor, their friend are talking about how much money that they're making in the market, and yet they're the sophisticated ones. The FOMO is one of the things that's going to want to get you to jump systems. So I want to go through the reasons why, because I want this to stick in your brain for when you start to have these thoughts, that there are dangerous thoughts. So FOMO, watching other people make money while your system is underperforming, can actually be very frustrating.
Okay, so that's an interesting one that I hadn't always really considered. It's not about what you're making or not making, it's what you see other people making. And some of these people might be a bunch of crypto degens on Twitter, or a bunch of people on YouTube who you don't really respect, or even people close to you that that you're better than as far as being a trader, as far as being disciplined, all these things. And they're the ones that get to have their time in the sun. And it's not just a fleeting time in the sun, that they're still doing really well while you're sitting there treading water. I can understand how that would be a drain on somebody. So, okay, there's one. And another one of the reasons you have here is kind of what we alluded to a minute ago, but I think it needs to be said because everybody goes through this. And I think the biggest reason is that your system is just not doing well in the moment, and it's not giving you the same euphoria you had in the past, and maybe it just keeps losing, or maybe it just keeps breaking even. And so now you think, well, this is probably just the market. This is probably just how it is now. As if the entire trading market was one way, and starting January 1st of this year, for example, it became completely different, and this is just how it's going to be for the rest of eternity, which is absurd.
Totally agree. And another thing I want to talk about is when people build systems and they backtest it, and they backtest it over 5 years. Do you understand that with the systems we have now, you can backtest something over 5 years in about 1 minute? Do you know how long 5 years really is? So you get this really fast payoff when you build a system, you backtest it, you get this very quick payoff of getting numbers. But then as you go implement this, it seems painfully slow. Painfully slow, so slow that you're thinking to yourself, I'm never going to get where I want to be. I think that's another thing that sets people up for jumping systems is they build their system, they backtest, everything's great, and then when it comes to how long it really takes to crank out 15, 20, 30, 40% gains, when that's really in your face, not just a back test, but it's a year and a half, 18 months, people say, this is too slow for me, I'm going to jump to something else.
Yeah, all that makes total sense. It's just, especially, there's such a disconnect, I want to say it again, between the back testing phase and the real trading phase. Like, let's say you did run a system check, 5 years back, and it gave you good results. There could have been a 20% drawdown year, like in year 2 or year 3 or something like that, and you would have never known. There's no way to know that unless you really run a heavy diagnostic check, which most people don't do, or just don't even know how to do. So these are things you don't see. So you get to experience all these things in real time. And when you back tested, it didn't. So, once that reality finally hits people, they just don't always deal with it the right way. So let's talk about the right way, Rob, because I think there might be some people out there expecting us to just say, well, just don't feel that way and just understand that if you see it through, it's all going to be fine. But that's not necessarily the solutions we're about to give. So go ahead and get us started here.
The first thing that you really need to think about when you are discussing or entertaining the thought of changing up the way you trade, the first thing I want you to do is I want you to really try to get all of your preconceived notions out of your head. And here's a question. Are you making this decision when you're under distress? That should be a major, major red flag. If the answer is yes, if you're making this decision after a 25% drawdown, there is no way that this is actually a good time to make this decision. So I want you to be very, very conscious of when you do make this decision of, do I want to jump systems? Make sure that it isn't at a low point. Make sure it's not at a low, because at that low, it's going to be almost impossible to not do this for emotional reasons. So that's the first thing I want you to do, is really check your emotional state. If you're at a low, I highly recommend take a month off, come back a month later, then make the decision. You're much more likely to make a better decision if you're not under distress. The second thing you need to ask yourself, is this cyclical or secular? Now, I want to put these words into your vocabulary. If you don't know what they are, I'm going to explain them. But something that is cyclical, it runs in cycles. And we know a whole bunch of things that run in cycles. We know in the Forex market, sometimes we have really good trends, really high volatility, and then sometimes we have poor trends and poor volatility. And during these poor trends and poor volatility times, if you are a trend trader, I can already tell you your system is not going to do as good in those moments as it did in the good trends, high volatility moments. The question you need to ask yourself is this cyclical? Is this simply that it's just we're part of the cycle where we don't have a good trading environment? So we have things like economic cycles. We have, booms, we have busts, we have bubbles, we have popping bubbles, we have stagnation, we have inflation. We have all of these cycles that we know are not going to last forever. Patrick, do you have anything that people can use to really think about this term of cyclical?
Like an actual tool, no, but I think I'll just add that from 2018 to 2021 probably, and if you're around then, there were a lot of times in the market where the Forex market just wasn't moving. Most of the money was flooding into the overall stock market and into crypto. And when it's going away from Forex, we lose volatility. And as a trend trader, it's really hard to trade. So there was a lot of doubt going on then, because as soon as we would get out of the woods, it would go right back and we'd take losses and we'd be right back to Dullsville again. And that's really hard to put up with, especially when you're back testing your system from 2015 to 2017 and it is doing a lot better. So it's a hard pill to swallow, and I think we lost a lot of potentially really good traders during that time. But things are cyclical. The market is better now. And that's a very long-term cycle we're talking about. But within those cycles are smaller cycles. And your system is not equipped to profit during all of them. It's designed to sit out during a lot of it. At least if you're a no-nonsense Forex trader, I can speak to this. And there's going to be some times where the market just doesn't play very well with us. And the good thing is a good system is designed to not get too beat up by times like that, but it's still going to happen. And sometimes it's going to happen consecutively, and that's going to really chew up your bottom line. So all of these things can happen just within the course of 6 months. So if you haven't experienced it before and it's here now, just know it's supposed to happen, and it won't be the last. So you better hope you're built for this.
These cycles are guaranteed. They've always been around. They'll always be around. They might change a little bit in nature, but the boom and bust cycle of markets, of economies, that's been going on forever. So when you are analyzing your system, where it is right now, you aren't getting the results you want, because that's the only time you want to jump a system. You really have to focus on, is this simply cyclical? And if it is cyclical, then we need to already be thoughtful about what are we going to do in these times. Now, Patrick, you said a great thing about a good system is going to keep you out of the market during those times. At Maverick, we say that knowing when not to trade is just as important, if not more, than knowing when to trade. Cash is a position. Cash is a decision. And don't be worried that you're not, quote, doing enough, because if you can avoid the situations that aren't conducive to your trading system, that's going to be amazing. That's really what you want to do. If it's cyclical, you want to do what you can to get through the period. You want to have a system that will get you through it, that will keep you out of stuff. Cyclicality will always end. The other term, secular. When there is a secular change, it means that things truly are different. And let's talk about some of the things that have changed over the years. We discussed this in our episode about AI, about how there have been some changes that have occurred in the marketplace that really did move things to be different. We talked about when the markets moved from floor trading to electronic trading. And we talked about how that was different. Things started to move much quicker than in the past. So if you had a system that was a system that had been time tested for 20 years with the floor traders as they were writing on pieces of paper and walking over to the post and writing and scribbling some things on a piece of paper and throwing some hand signals, that changed. And that was a secular change to where maybe the system you had will no longer work because of changes in technology. We also saw this with ETFs, with mutual funds, with index investing, to where all of a sudden things truly are different. Now look, trading is still the same ball game. Things go up and down based on supply and demand. But these secular changes, they aren't going to unwind themselves. So like when we got to electronic trading, it wasn't a phase. Remember when your mom said that the internet was just a phase and no one's going to use it? Or here's the best one I like, is when Michael Dell, who started Dell Computer, told his mother he was going to start a company and he wanted to borrow some money from her. And she said, "What's the company?" He's like, "I want to make a home computer." She laughed at him and said that is the worst idea that she'd ever heard, and who would want a computer in their home? But she lent him the money because she loved him, and she is now, a multi-millionaire because of her son. These cyclical changes do change things, and we do have to at least look at what's happening in the marketplace today. Is it cyclical or is it secular? And if it's secular, you need to realize that and say, oh, The game has changed. I now need to evolve.
But I do got to push back a little bit because I don't think most people really need to worry about that. Because one, how often do we even see such a sea change like that in technology as far as trading goes? And then two, like we said in that past episode, price action is still pretty much price action, no matter what technology we see come about, right?
Absolutely. And this is just where you ask yourself the question, is it cyclical? Is this actually a big deal? We discussed this in AI, and we talked about how all the changes are happening in AI, but in the end, you and I both agreed it wasn't really going to change anything. But there are some things, like if you were a high-frequency trader, and again, I'm using air quotes, if you were a high-frequency trader in 1950, meaning that you were really fast running over to the next post at the New York Stock Exchange and throwing some signals and then running back to the next one, electronic trading did affect you, and you did need to evolve along with it.
I'm just laughing at the idea of high-frequency traders in 1950. But before we get to the actual solution parts, I think we're kind of in the diagnosis stage right now. But I do want to add one thing, and I should have done this before, Rob, but you were on a really good roll. But you guys know I'm not a fan of taking breaks. I think you should just kind of power through it, because as soon as you do take a break, you're going to get that really great run that erases a lot of losses you just took. However, if you're going through this type of drawdown, before you do anything, you have to make sure the problem isn't you. And we've talked about many, many, many ways the problem could be you on this show. But the best way to know is through your journaling. And we've spoken about this too. The comments section on your journal is the most important section of the entire journal by far, because that's where you admit that you are the one who made a mistake. And you need to go back and see if you're doing this correctly, which you should be. If not, then I can't help you. But you need to be looking back and see, hey, am I making more mistakes than usual? Am I still making mistakes? Is the number of my mistakes that I'm making not going down? Because until you fix that, you can't be blaming anything on the system you created. You can only start doing that once you have damn near eliminated every possible mistake you can make along the way. Because if you haven't, then the problem is, let's just say, not your system. And you need to be looking inward.
Those are very wise words, and that's where everyone should start. If your system isn't producing the results you want, you need to look at you first, 100%. You look at you, and you make sure that you aren't the problem. When you were talking, I realized that we had done a little bit of a disservice not discussing this earlier in the podcast, and I apologize about that. But let me tell you how these things work. When you have a system that worked for a while and now it doesn't work and doesn't work and doesn't work, right at the point that you want to throw that system away is so close to when that system is highly likely to start working again. And that's just how these things work. That's how capitulation works in the market. That's why we get blow-off tops. Blow-off tops were all the people that were counting against this run or betting against this run or doubting this run. They finally capitulated and said, oh my gosh, I've been so wrong. I finally am going to give up. Those are the tops. And when people finally capitulate at the bottom, says, okay, I can't handle it anymore. It's so bad. I just need to cut the bleeding right now and stop it. And they bail. That's the bottom. When you feel like you want to jump system, it's probably because you're right there at that moment. And I'm really sorry we didn't bring this up earlier in the podcast, because this is where we should have started, is that psychologically, when you get to the point where you want to jump systems, you're probably close to the point where it changes. And that's why, Patrick, I love your advice of just keep going, because it's going to avoid those psychological problems.
Hey, and better late than never. I'm glad we had a chance to bring it up now, because we are now to the actual hardcore solutions part of this episode, and these are all created by you, Rob, so go ahead and list them off, and I'll jump in where I need to, but I may not need to.
One of the things new traders do poorly is they never plan out what they're going to do if and when their strategy doesn't work. It's never even a thought. You back tested it, you future tested it, you demo tested it, and you know what? It's going to work. You proved it, you did all the work, it's going to work. So you didn't even plan on there ever being a time over the next couple of years where you actually had to make this decision. And if you didn't plan it out, you are making the decision at the worst time that you possibly could because, again, you're under distress. Everyone needs to predetermine when systems are going to be evaluated and changed and adjusted or discarded. This all needs to be done during a time when you aren't under distress. So if you're trading your system right now and maybe it's working, maybe it's flat, as long as you're not under distress, right now is a great time to put in some benchmarks, some guardrails to where you actually are going to start asking these questions. Now, it could be a time frame. It could be a drawdown amount. It could be a win-loss percentage. It could be whatever you want to tie it to. And I highly recommend that you go back to your backtesting and take a look at the worst moments of the backtesting and say, hey, you know what? The worst drawdown I had was 18%. So I'm going to say 20%, to where it's even worse than the worst part of my backtesting. Now you've actually done it in a time where you weren't under distress. Now you can actually look at it. It's all predetermined, and you actually will determine, okay, when and if X happens, I'm now going to, 1, halt trading, 2, reduce position size to half, 3, whatever it is you decide, but you predetermine everything. This is going to make it to where you are using the logical side of your brain, not the emotional side.
I really, really love this, and I've never thought of this. Now, we've done things like this before, Rob, with being proactive, anticipating these things ahead of time. I tell a lot of crypto investors that are fairly new, I'm like, look, the one thing you need to do that nobody does is put something on a spreadsheet or write something down that says when you're going to take your first profit. Because a lot of people are just looking for these things to go to the moon, but they have no structure in place for what they're going to do once it gets there. And once it gets to a point where you need to take it off, you're not going to want to take it off. So I said, look, you need to get ahead of it now, write down a plan of what you're going to do and when you're going to do it. And this is the same thing. And this is really going to be a step that most people aren't going to want to take. I'm going to be sexist, and I'm going to say I will bet our female listeners are much more likely to do this than our male listeners because they understand the importance of these things, to where the male listeners say, no, I'll figure it out once I get there. Well, you might have not ever experienced real drawdown with this system before. So how do you even know what you're going to do? You need to, like Rob said, do this now while there is no distress, while there are no emotions at play. And I would say take whatever number you think you're going to need and give yourself an even bigger buffer zone than that. Because I don't think, abandoning an entire system and jumping to a different one is really the move, with 5 to 7% yearly drawdown. Sometimes you have to ask yourself some questions once you get down to 10 and things like that. We've talked about that a long time ago on my channel. But give yourself some leeway here because, like we said before, that system gave you a nice long sample size, but had a lot of hiccups in the middle. And you probably have no idea how big those hiccups were. So if you're going to do this, and I recommend you do this, give yourself plenty of buffer and plenty of leeway for this thing to do what it was designed to do. And sometimes that thing is to give you drawdown.
Patrick, as you know, I'm a big fan of not making binary decisions. Binary decisions meaning black or white. It's really difficult in the world of trading to make those kind of decisions, especially when things aren't going your way. We really like to talk about a capital allocation plan and Maverick. And now this is way more advanced than most traders are going to have. But just think about this. Just think about a trader who says, okay, I've backtested my system. I've got $10,000. I'm going to put in $8,000 and I'm going to withhold $2,000 for the time I have my first 15% drawdown. And when I have my first 15% profit, I'm going to take a $2,000 distribution. Well, again, the numbers don't work out. But again, hopefully you see that this is kind of the next level of trading to where you're planning out, what am I going to do when I succeed? What am I going to do when I fail? And you talked about, when are you going to take those profits out? When are you going to take them out, and what are you going to do with them? I have traders that take profits out and they simply hold them for when they have a drawdown, and then they put them back in at those moments. It really helps the math out. If you are putting new capital in after drawdowns and taking capital out after big runs, it helps the math out quite a bit. But as you can see, all of that only works if it's predetermined. If you're doing it just in the spur of the moment, realize that you're probably going to do it wrong. You're probably going to do it totally at the wrong time, at the wrong places, because it's all going to be based on emotions. So the biggest thing is to determine everything in advance and go past things like, your win-loss, and talk about things like, when are you going to take money out? When are you going to put money in? If you take money out, where are you going to put it next? Which really leads into the next thing that's really going to help you with this, is if you have multiple systems and multiple investments working, it helps this so much. If you are a singular trader with a singular strategy, with a singular trading account, all the pressure is on that account. And how you feel at the moment is going to be based on how that account is doing at the moment. Once you can get enough capital to where you can run multiple systems, and Patrick, I know you're a big fan of this, because if one system isn't working, another one is. Right now gold is looking fantastic. Gold's had a great move. So if you've had money in the gold market, in the metals market, and maybe your Forex account isn't doing as well, you know what? You're not so stressed out about that Forex account because your overall net worth is still growing.
God, it's so funny you said that too, because I've never really looked at it that way. I always thought that I would get super emotional over my trading account because I was still working restaurants, and I always felt that was my ticket out, and that was probably a reason. But it's really interesting how I've transitioned into Forex trading now, to where I literally don't care what happens to that account. And the reason is because I have other streams of income, and I have other investments, and I have other things going on that give me money. So I don't need to rely on my account so much for anything, really. And as a result, like I've told people in the past, my trading is better now than it's ever been. Funny how that works, right?
The more you can remove binary results from your life, the better you're going to be psychologically. If you put all your eggs in one basket, and we've heard that saying, putting all your eggs in one basket, that's a lot of stress. That's a lot of stress. And with stress comes emotions. And with emotions becomes bad behavior, because you're literally using the wrong part of your brain. You put a bunch of eggs in a whole bunch of different baskets, and one of the baskets tips over and an egg cracks, but you've got all these other baskets. You don't have to make a reaction to that. You are much more calm, because you're looking at your whole net worth saying, okay, well, that's not working out right now. I obviously have to deal with the problem. It's a problem. I got to deal with it. But it's not binary. It's not the only thing you've got going on. I know this is going to be very difficult for people early on in their life. I started as a trader at 22 years old, and my net worth was tied up in my trading account, and it was stressful. But I did other things. I did some real estate. I did some other jobs, and it really took the pressure off my trading to where my trading was just for the sake of trading. It wasn't to pay my bills. It wasn't for anything else. It was purely for growth. That took a lot of stress off me at that young age where I wasn't disciplined, where I had a difficult time following the rules all the time because I had other things. I highly, highly recommend, and Patrick, I know you've stressed this so many times, have other things going on. If trading is the only thing you're focusing on and that singular account is the only thing you're focusing on, the emotions that come with it. Look, I lived it. It was rough. When you spread your things out, put eggs in more than one basket, everything's easier.
And I'm going to be helping out with this too. This is something I've mentioned several times across all platforms. And that is a video I'm going to have coming up this year. I have it slated for this year, hopefully sooner than later, of all the different ways you can make money as a profitable trader. You don't just have to actually trade. I have a list written down. I think I have over 20 different ideas, and I will probably be adding to it. So we will help that process along because I want you guys to get there too. If you're not able to go pro in other things, I want to help you do that here because, again, it really does make a difference. You'll be so less likely to want to jump systems if the overall outcome in the short term really doesn't matter a whole lot to you. That is an absolute luxury. Now, Rob, I really liked what you said too. You guys just keep coming up with really inventive yet sensible money management tactics at Maverick, and even ones I've never heard before. Never ceases to amaze me. I'll bet you discount prop firms have no idea how to do any of this type of stuff. So kudos on that one. But I think we need to get to this last one here now. And this is something that I have mentioned before. And what you have written down here is to scale down position sizing during these undesirable periods. Now, on my channel, I have recommended doing this when the markets are completely dead. Some people don't want to sit out for 4 months. I get that. I said, okay, maybe because you're going to take more losses during this time as a trend trader to go ahead and drop down to a half position or even drop down time frames because there's probably going to be more opportunities there than there would be where we like to hang out on the daily time frame. So that is still my advice today. But you're saying that you can do this even during periods where you're taking a drawdown as well. Am I reading this right?
Well, it's basically at a predetermined time. And it doesn't need to be at a drawdown. I really like to tie this to something that is data-driven and something that can be measured. And look, you might be trading just fine and an indicator you watch. So again, I'm just going to throw something out. The VIX is now under 10. And you've determined that when the VIX is under 10, you're no longer going to be trading this strategy. And the VIX goes under 10. Okay, that was all predetermined. You didn't jump systems. You didn't change position sizing because you just had a bunch of losses and you can't handle it. Those are the worst decisions to make. But if you predetermine the criteria of when you're going to actually either cut down position sizing or sit out of the market or change timeframes, then the decision wasn't emotional. It was logical. It was pre-planned. It was tested. And you're simply following your rules. That's the biggest thing I hope you're getting from this episode is that you can set up any rules you want. You just have to think about them in advance because making the decision at the moment is very detrimental to your account.
Yeah, and that's kind of what I want to say as we wrap these solutions up is I think really a gold mine of what you said earlier is to have these exit points to when you're going to really consider jumping systems predetermined and to do it now while emotions are low instead of while you're taking a bunch of drawdown and emotions are high with all the despair and things like that you're experiencing probably for the first time on a long-term basis. And then to have multiple systems or investments or income streams working at the same time so you naturally don't feel as much despair as you normally would if trading was all you had. And then I think you pretty much agree with me there, Rob, to scale down when things are really slow, but even if things are not going your way, in order to kind of get your head back around and then decide, okay, is this something I really want to do? Because it's a big step. And it's a very important question to ask. So I hope we have answered that. And Rob, do you want to add anything before we close up?
Yes, I actually want to add a story because I really want to get back to this cyclical versus secular. Cyclical, meaning that whatever is going on right now is going to change and it's going to go back to quote unquote normal. And then you have secular. I want to tell a little story about probably our best trader back in 2009, 2010, making bank. Sent this guy $30,000, $40,000 a month. And what he was doing is he was shorting inverse ETFs. So you have like the TQQQ, which is the 3X NASDAQ ETF, or not NASDAQ, but NASDAQ 100 ETF. And then you have the SQQQ, which was the inverse 3X ETF. If you buy them both or sell them both, there you are basically long one, short the other. Theoretically, there should be no difference. But guess what? There was. Back in those days, there was a difference. It was about 0.1% a day, to where if you shorted both of them, because of the decay and the way they're put together, one went up like 0.3% and the other one only went up 0.2%. And all of a sudden, went down 0.2%. All of a sudden, they were catching these little bits. And at the end of every day, you just rebalance to make sure that you're now, the same amount long as short for the next open. And then at the next close, you simply rebalance it. This strategy worked extremely well for about 3 years. And all of a sudden, the checks started to go down of what I was sending them. And at some point, that edge had been completely erased. You're going to find that the more popular a strategy becomes, remember, strategy becomes popular because it has worked for a prolonged period of time. We see this all the time with people doing short. I'm doing a lot of option stuff because this is very popular in the options world. But years ago, it was short straddles and short condors. Everyone was into those and they paid very well. What happened was so many people started doing them that options premiums became depressed because so many people were doing them, and all of a sudden there was no edge anymore. One of the next ones that I've seen lately is 0 DTE options, 0 days to expiration options. So people are selling options that expire today. Same thing. You used to get big fat premiums out of them. All of a sudden, more people are doing it, pushing the premiums down to where there's no edge anymore. Really no edge or just a small edge. This is what I'm talking about when I talk about a secular change, to where things truly have changed. The edge is no longer there. And if that's the case, then you do need to jump systems. Don't keep hitting your head up against a wall because the system that used to work is no longer working. You have to admit when it's over in a secular way, when there's just no more edge. So I want to just keep bringing you back to, is it cyclical or is it secular? Most of your strategies are all going to be cyclical, meaning they're all based on price action, they're all based on trends. Look, nothing is going to change as far as that go. But if you have a strategy that's like, I go long dollar, short yen every single FOMC meeting 14 minutes before the meeting, and then I sell 5 minutes later. Again, I'm just making up total BS. But if you backtested that over the past 20 years and it gave you a payoff, at some point that may not work anymore because that could be a secular change. Look at this situation. Is it cyclical? If it's cyclical, stick with it. Stick with what you're doing. If you need to cut position size down, have a predetermined time to do that. But if it's not secular, keep swinging. Keep swinging. That's all I got, Patrick.
And the good thing is, if you are a no-nonsense Forex trader, none of this will apply to you because we are very under the radar in the way we do things. And on top of that, everybody runs different systems within that overall system. So, on those notes, thank you everybody for joining us here at the Trading Psychology Podcast. Rob and I will join you next week.
Goodbye, everybody.
This is the Trading Psychology Podcast. This is VP, creator of No Nonsense Forex and author of the book No Nonsense Forex Trading Psychology. And with me, as he is every week, it is the proud papa. It is Rob Reinhold.
Well, hello everybody. And yes, Patrick, I'm definitely a proud papa here. But I got to say, most babies, they take about 9 months, 9.5 months to come. This one I've been working on for 11.5 months. So this is like elephant style baby coming out.
I'm telling you, we're really looking forward to getting into this episode, and you'll see why in just a moment. But let me go ahead and remind everybody, because we try to do this at the top of the show, I normally forget, that this episode and every episode is sponsored by Maverick Trading. There is a stocks and options division, and there is also a Forex and crypto division. You can join either one. It is the best prop firm in the world. I've been there 10 years myself, I can tell you this. And you are about to see just what can be accomplished at a firm such as this. So Rob, tell everybody, because I don't know when people have joined. Some people have been with us the whole time. Some people have only been with us recently. Some people might be coming here for the very first time ever. What exactly, not what it does, but what is flat earth trading?
Well, in August 1st of 2023, I started the Flat Earth Trading Society YouTube channel. Now, the reason I decided to call it Flat Earth Trading Society, because I wanted to expose the conspiracy of trading.